I think this is 2017 or something, when this is the first DAO that actually it's called a decentralized autonomous organizations. It's kind of like running a company or running some kind of a project, business venture over a decentralized network, right? So it was an investment fund, I think.
In a fast-moving digital world, what does it mean to be a sustainable business? And how does identity empower your business? Join me as I share a glimpse of our life at Spokeo, explore the minds of data industry leaders, and dive deeper into relevant topics in the digital world. All right, hello, Steven. So I just want to say thank you for coming to the show. And we know each other for a long time, since the college days, right, at Stanford.
Yeah.
And then I know you have crazy stories. We study electrical engineering, and then you went to strategic consulting, and then later on, now is doing blockchain. So a lot of twists and turns. But to start off, do you mind kind of share with us a little bit about your story and journey and how you became the CEO of Taraxa?
Yeah, sure. Well, thanks for having me on your show, Tang Talks, right? So-
Catchy
yeah.
name.
Catchy name. Yeah. Yeah. I mean, it's been an interesting journey. Yeah. So yeah, I think my path towards blockchain is kind of a long and arduous one. And I first sort of heard about Bitcoin in 2013 from Bobby Lee. I don't know if you know Bobby. He was a few years ahead of us. He
No,
started.
I don't.
Do you know Charlie Lee, the guy who started Litecoin?
No, I don't
Or
think I'm
no?
as social as you.
Anyway, he like Bobby is his brother. Yeah, yeah. So he started this exchange in China and told like all the Stanford people about it. And that's when I first heard about Bitcoin was back in like 2013. So it's kind of interesting. Didn't quite get it. Thought it was interesting, but didn't get it. And then and Alex Liu, right?
Yes, I do.
Yeah, Alex. Yeah. He was EE, so we all knew him. So he started telling me about Ethereum, I think back in 2015. So he started a blockchain company in Taiwan too. So I started looking into it and still didn't quite get it. And I think the third time was it was Jianbo, right? That
Yes.
Jianbo. Yeah. So he told me he quit his job to start doing full time. I think blockchain back in 2017. So he started telling me more about it. And I think the third time I sort of really got it, right? Took like 6 years for me to, or 4 years, I think, for me to really get it. And then that's when I decided to quit my job as well to actually start doing something in blockchain. And I think what really got me interested in this area is this idea that decentralization could be used to make things trustworthy, right? Things that are otherwise not trustworthy before could be made trustworthy through decentralization. And the concept is actually very simple, is that if you're the sole provider of a service or information or data or whatever, then people can always be suspicious of your motivations, right? Are you doing something weird with the data? Are you motivated to change it? Are you motivated to cheat? And as we've seen before in this world, I mean, people do cheat, right? They do all sorts of things that might not be to the benefit of their users. So decentralization basically creates like a large network of anonymous node operators that run some sort of application logic, right? And each one of them by themselves are, it's highly unlikely that you're going to be able to bribe like the vast majority of them to do one thing, right? Because most of them just don't even care about you or anything you do, because your traffic is such a small portion of the overall traffic. So it's that part of it makes, I think, the logic or the transparent logic and the workings and the processes that actually happen on a decentralized network much more trustworthy. The output becomes much more trustworthy because the processes are transparent, and it's inherently just a lot more difficult to, I think, bribe people to do bad things. So yeah, I mean, I thought that was very interesting because I think if you start trusting processes and data and a lot more, then you can start automating things a lot more, right? So we're always, I mean, as an engineer, we're always looking for ways to make things faster and better, right? So if you're able to trust the underlying data, you're able to trust underlying processes, then you're able to automate things a lot more and take humans out of the equation a lot easier. So it could just create a lot of efficiency. So that's what really made me think, hey, this is a very, very interesting area to look into, because trust is not something that people think about typically, right? I mean, if you look at business schools, right, like people, like the idea of an MBA didn't really exist until like a few decades ago. And the reason why they started emerging is because corporations started measuring things, right? They started measuring, KPIs, all these like processes, and setting quotas, setting targets. And once they start measuring things start improving. And trust is not something that people measure, right? People don't measure the cost of trust, and the cost is tremendous. It's huge. Like the kind of systems that we put in place and the effort and resources we actually put in to actually make sure things are trustworthy. We have legal frameworks, social frameworks, we have large institutional processes, all put in place to make sure things are trustworthy. And we don't think about that. I mean, a lot of times we just walk around and we don't even think about that. We live in a world expecting things to be correct when a lot of effort have been put into place to make sure that they're correct. So I think this idea of being able to make trust a lot more efficient, right? To guarantee the same amount of trust, but do it at like a fraction of the resources, I think, and make it much faster. That's very interesting. I honestly still think that this is the next frontier, right? Of how we can, sort of really accelerate our civilization, quite frankly. So that's really what got me into blockchain. I think it's it's not what you hear typically in the news today, right? Which is all speculation and whatever scams. But I think inherently it's really about trust. It's the decentralization, make things can engender the same amount of trust in an automated and much more cost effective way.
So I think you and I know that blockchain is not the same as cryptocurrencies, and but for those who are not familiar with blockchain, can you actually explain what blockchain is and how does it kind of decentralize trust?
Yeah, that's a really good question. So at a high level, I think cryptocurrency is a application of blockchain technology, right? And I would say that blockchain technology is one way to achieve decentralization. There are lots of different ways to achieve decentralization, but blockchain seems to be like currently, I think, like sort of a very interesting and very good technical way to achieve decentralization. So how does it make how does it make things trustworthy, right? So if you think about, I mean, if you think about like for example, if you think about like a website, right? And you, like, you, Harrison, tell the website, like, you give it a number like one, right? And then I go to the website and I say, well, what did Harrison tell you? And the website said, oh yeah, Harrison said two. And I'm like, okay. I mean, I don't know. Right? I have no idea. I have no idea whether or not it's right. I have no idea whether or not it's wrong. And maybe a third guy, I don't know, maybe Andy paid the website to say Harrison said two. I don't know. I have no idea what is happening, right? And this happens a lot, right? I mean, if you go to something like a Facebook, if you run an ad on Facebook, it is quite ridiculous, actually, if you think about it. Facebook sets the price, and then you pay them some money, and it does some things. And how do you know whether or not those things are done? Well, Facebook tells you whether or not they're done, right? And then you're like, oh, okay, I guess that's true. You have no idea. I mean, you just have no idea whether or not it's true or not. And then you don't really have a choice because it's a centralized platform. So you have all these instances in which you're always sort of like, well, I'm not really sure whether or not this is true, because the entity that's actually telling me this information could cheat. Now, I'm not saying they are cheating, although most of the time they are, but they could cheat, and then there's nothing I can do about it, and I wouldn't even know if they're cheating, right? It's a very strange system that, that actually that we have today. That most of the processes and platforms and application and logic that we have are actually centralized in this way. So how does decentralization help, right? So right now, what you have is sort of a system where instead of one company or controlling like a single entity that tells you what's true, maybe you have 100 identical companies or identical systems doing the same thing, right? Or they're randomly selected to do something, right? And you never know ahead of time who is chosen to do what, right? So then it becomes very difficult for them to cheat, right? So you put in some inputs and you have a fixed set of logic that that process the input and gives you an output, right? And everything is auditable, and every single process is verifiable by everyone else on the network. And if they find that the outputs don't correspond to the input, they will reject it, right? So that's what decentralization is. It's basically, you take something that only one person does or one entity does, and you just spread it out to hundreds or thousands of different entities. and they're randomly selected to do the same thing, and they're verified by everyone else on the network. So that makes things a lot more trustworthy because it's a lot harder to cheat. And in a lot of times, there are financial incentives actually built into the network for people to not cheat, right? Actually, we've also seen financial mechanisms that are built into some of these decentralized networks in which other people can challenge the results of specific nodes. Like let's say that one node or three nodes are randomly selected to process something, right? To calculate a number, or, calculate an accounting broadsheet or something like that, and then another three nodes come by and say, hey, I think what you did is wrong. We're going to challenge you, right? And we're going to put money up, right, to say that you're wrong, right? Let's say we put $100 up and say we're wrong, and then we're going to send this to the rest of the network, right? We're going to bring another 20 nodes to come in and randomly selected to see if it's right, and they come in and say, all right, the challengers are right. So the guys that processed the original three, they're punished. Like $100 gets deducted from them and goes to the master challenge. So the challengers just won $100 for challenging. So there are lots of interesting ways that just by decentralizing the processes, you get a lot of guarantees, and you can also build in financial incentives to incentivize people to report malicious behavior, incorrect behavior, right? So decentralized networks are very good at making sure people cannot cheat. So that's really 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 interesting. Now, when you mention cryptocurrency, cryptocurrency is interesting because it's really sort of a decentralized accounting, right? Because what is currency or money anyway? It's really a ledger, right? Of like you have this much money, you have that much money, you gave that person that much money. I mean, that's really what a currency is at the end of the day. It's just like a ledger. So what this is why like a lot of times blockchain is also called decentralized ledger technology, because it's basically decentralized accounting, right? So that is basically decentralization being used for accounting, right? So that's how you get cryptocurrencies. And I really want to emphasize that cryptocurrency is just one application out of many, many different applications that could be used for decentralization. It does have a lot of interesting properties. I think the first and foremost interesting property of cryptocurrencies, or actually decentralized systems in general, I think is censorship resistance, right? So basically, these systems, on top of being very hard to cheat, right, in these systems, where making it almost impossible to cheat, they're almost impossible to shut down, right? So I think we've seen a lot of and this is we've seen a lot of places in which local governments or corporations or whomever maybe don't like what they're seeing, right, in these networks. They don't like networks that they can't control, and they arrested all the coders in their country, put them in jail, and tell them like we're not going to let you out until you shut it down. And the coders are like, you can, even if you kill us, we can't shut it down. It's not possible to shut it down, right? I mean, it's just, how are we gonna? We don't even know who the people that are running the rest of the network is, right? So that's something that's also very interesting. So I think that's something that captures a lot of the imagination in within, I think, the cryptocurrency communities, is this idea that you have this autonomous network that just works, and it's very resistant to interference, outside interference, from companies, from individuals, from governments, from whomever, and it's something that just sort of works on its own. That's very appealing because it acts as a very consistent anchor, right? And yeah, so lots of places in the world are very unstable, right? They're looking for some source of stability. I think you and I are pretty lucky to live in a pretty stable place, but I think I always say the vast majority of the rest of the world are not like this. Yeah, so.
Yeah, definitely. Like I think some parts of Africa, like Zimbabwe, they have crazy inflations, right? So
Yeah, exactly. Yeah.
anyway, like this is a great solution for them. So other than like decentralized accounting or decentralized finance, so like what are the other market use cases that decentralized distributed ledger technologies like blockchain can actually help?
Yeah, that's really great. So I would say that the types of applications that we've been looking at have all been non-financial driven. So we firmly believe that finance is a like a tiny speck within the whole universe of potential applications for decentralization. So let's say, I mean, I'll just go backwards in time, right? The application that we're currently working on right now is an application that helps Web3 projects run automated social campaigns, right? So the pain point here is really obvious, is that as soon as you run a social campaign in which you incentivize your community members to spread the word about something, that's usually what social campaigns are meant to do, is raise awareness and to expand the reach of your community. And the way to do it is you incentivize them to do it, right? People either give out rewards or whatever ways that they do it. And what usually happens is that 99% of the rewards go to spammers and bots. Right? They're not people that are actually doing. They're not even people most of the time, right? And when they are people, they're sort of like bounty hunters who don't really care about anything. Today they're talking about your project in Web3. Tomorrow they're talking about cats. Whatever. I mean, they don't really care. So these are not really people, and definitely not robots that you want to be participating in your social campaigns. And hitherto today, I mean, there hasn't really been a good solution. People either run it and just know that they're gonna waste 99% of their funds, um, or they hire like a large team of people to. And this, I'm not making this up. Is that all the projects seem to be doing this, and they hire like a large team of people to manually examine every single submission people are making. They're saying, I said something in this group, I brought these people in, I can prove that they're real, and they're manually like auditing every single thing, and the cost is astronomical, and it's not feasible, especially for smaller projects to actually build their community this way. So the thing that what we're doing is we're saying, well, fundamental to this problem is that the social data that's actually being used to generate rewards is not trusted. It's either fake, it's bot driven, it's whatever. You can't trust that data. So because you can't trust the data, you can't automate it, right? So we're building a decentralized network on top of the Taraxa blockchain, layer one blockchain, that captures social data right now from Telegram, which is a very large social network when it comes to discussions about Web3 and crypto. And we're monitoring over 10,000 groups automatically, and we're seeing what people are saying. And these are public groups, right? So they're not like private groups that we're invading people's privacy. These are groups that anybody can join. So in order to participate in a campaign, all someone has to do is to say something in the group related to the specific project and whatever it is that they want to raise awareness about, right? And the platform will automatically capture all this data, and it will filter out automatically, spam. It will filter out bots, and then it will calculate. It will make a really good estimation, a conservative estimation of impressions, which is reach, and it will calculate basically who's contributed how much, and then automatically assign rewards, right? And these rewards are given out when these users come to the platform to claim their rewards, proving their identity through authentication through their Telegram account and associating them with a wallet. So this is an example of how you can actually run social campaigns automatically, without and the reason why you can run it automatically is because now you trust the underlying data. It's been automatically filtered out, but it's not being filtered out by one person or one company. It's being filtered out by a network of nodes that are randomly selected to perform these things. So that's why it can be automated. So this is one area where I think it's actually very, very interesting. Another area, which is something that we've been very passionate about, and you and I, we both studied hardware, right? And as we know, hardware is slow. It's very slow. It's like 100 times slower than software. But I think hardware is fundamentally a lot more interesting, I think, than pure software. It's just, unfortunately, it's very slow. But I always thought that actually machines could benefit from blockchain a lot better than humans could. And I can talk to you for 2 more hours on why that is. But machines have no identity. They have no concept of ownership of anything, right? I mean, it's very and then they don't forget things like humans do. Humans can't remember secret keys. Machines can, and they don't forget it. So I think blockchain is actually a really good way to confer upon machines identity and the ability to own property and ability to transact, to become economic entities, right? Right now they're just kind of like the machines are human slaves, right? And we just tell them to do whatever and they do whatever. They don't really make any decisions on their own. So anyway, one project that we actually started working on, that unfortunately our partner company was kind of destroyed by the pandemic, but it's this Japanese company that was renting out arcade machines, and they're doing really well in Japan for like 40 years, and then they start expanding to East China, East Asia, right? China, like Southeast China, Southeast Asia, and they were doing really well, lots of orders. But the problem with them is that they work on a very interesting model. They work on a leasing model, right? A profit sharing leasing model. So basically, the machine sits in your retail shop, and we split however much it earns, right? So here comes the problem. How do you know how much it's earning? Right? At the end of the month, you call the guy and say, "How much did they earn?" It's like, "Oh, bad month, only $50." And you're like, wait a minute, it doesn't make sense, right? Like, how do I know you're telling me the truth? So then they said, okay, well, let's install sensors, right? So we can estimate how much you're earning. And then the shop owners, their leasing partners are unhappy because they said, well, what if whenever basically my accounting doesn't match with the sensors, like I'm wrong. Like, I mean, how do I know your sensors are right? Right? I mean, maybe you're cheating, right, with your sensors. How do I know? So then they're running into this huge problem. They have all these orders, but they can't fill them because they feel like either they get cheated or the other guy gets cheated. And then they said, well, what if we charge a flat fee, right? Well, if we charge a flat fee, the return on capital is very poor, right? And especially when they have new clients in new markets, these new customers aren't willing to pay a very high fee, right? Because it's supposedly unproven, right? No one wants to take the upfront risk. So lots of problems, right? So we said, okay, well, how about we do this, right? Why don't we? The sensor was a good idea, but the problem here is that the sensor data can't be trusted, right? People don't trust it because who's making the sensor, right? Like, who's controlling it? And we said that. So the goal here is to make the sensor data trustworthy by everybody. So in addition to sensor collecting the data, sending it to a central database, it does all that, right? That's fine. What it does is that every few hours or every day, it takes all the data that it collected in the previous period, turns it into a hash, and then signs it, right, with the signature, and then puts that signature and the hash into the blockchain, and that's it. So what that's doing is that it's creating an audit trail, right? So if somebody wants to say, wait a minute, like, I don't believe this data, well, okay, you can go back and look at the raw data and trace the raw data back onto the blockchain. You can hash it yourself and trace that back onto the blockchain. You can see entries of the audit trail. So you know exactly where each piece of the data comes from. It comes from which machine, when. And you know it's coming from that machine because it has the signature, and the signature can't be forged because there are these secure elements embedded into the chips, that are generating the signatures. And secure elements are on our credit cards, or I mean, they're everywhere, right? So they're very mature technology. So that solves this problem of sort of them not being able to do a lot of business or scale their business because people don't trust the sensor data. And it solves another interesting problem too in the process that we started talking to some of these large retailers. This Japanese retailer is actually their biggest customer in China. They have over 120 locations in China, lots of, like, hundreds of thousands of these gaming machines. And these retailers executives, they said that they're very worried that their employees are cheating them. Okay, they said that every month they get these data reporting up, and it's like the store level reports up to the city level, reports up to the provincial level, regional level, headquarters, and the data always looks suspicious. And they will ask for questions, and a month later they get more questions. Oh, that machine was broken, didn't really work. Or like, we had a bad weekend, blah blah blah. So all kinds of excuses, which cannot be verified, right? So they get more and more suspicious, and they said, this is actually really bad because it impedes their expansion speed. Because if you don't trust their team, how can you expand, right? So basically, a sort of lack of trust for the data starts percolating and spreading to lack of trust for people, right? And then you start creating lack of trust in the organization. And they said this is holding us back from expanding very quickly. So you started seeing, like, once you start talking about this idea for trust, it has real economic costs, right? And it has real economic opportunity costs in addition to real costs of all this verification, all this other kind of thing. So it also has tremendous opportunity costs. So I think this is another area where decentralization, by making data trustworthy, can actually solve a lot of problems and create actual real economic value.
By the
So
way,
these are, yeah.
just to clarify one thing, like what's written on chain, because as we know, like I think distributed ledgers, right? They build trust through transparency in data, like basically making these data public, right? So for example, from for for Bitcoins from this wallet to that wallet, the amount transfer is actually public, right? So I
Yeah.
would imagine sometimes the companies don't want the sensor data to be public.
Yeah.
So
That's a
what's
really good
written on
question.
chain? Yeah.
That's a really good question. So what's written on chain is pretty simple. It's just a hash and a signature, right? And a hash and a signature, if I showed you a hash and a signature, it looks like garbage to you, right? Because you don't know what it is, right? Like without the original raw data, that hash is useless to you. And the signature is just a signature. You don't really know what it is. And I mean, if you don't know that this belongs to a machine or a, whatever, then you have no idea what it is, right? So it's fine that all this is visible to everybody else because they can download it all they want. It's not going to tell them anything. So this is actually very it's called I mean, I think there's a phrase for it. It's like security through obscurity. Basically, yes, I can show it all to you, but you don't know what it is, so it doesn't matter. Yeah, so it's very important because obviously, like you said, companies don't really want people to know about their operations. Now, of course, there are ways where you can infer, right? Like, well, I can sort of tell patterns, like maybe they're doing this, maybe they're doing that. I don't know, but you can also intentionally start submitting a noise right into the blockchain to throw your competitors off. I mean, that's not very hard to do either. So it's pretty secure. Yeah.
And so how's because there are a lot of blockchain and distributed ledgers out there, right? There's obviously the Bitcoin, Ethereum, and then there's uh, Solana, Cardano. So how does Taraxa different, right? Is it the market use cases that you're focused on that makes Taraxa different, or is it the technology, or is it both?
Yeah, I think it's both. So I think we just mentioned a few use cases, which, as you can probably tell, is very different than what other people use blockchain for. So I think on the technological side, we're also pretty differentiated. I think we have a architecture and a consensus algorithm that allows us to scale the throughput of the entire network without really sacrificing security or decentralization, right? So there's this very famous blockchain trilemma, I think, posed by Vitalik Buterin, to create one of the leading founders of Ethereum, who said that it's very difficult to sort of get get your cake and eat it too type of thing. That you can't get everything, you can't get all three together. You can't get throughput, which is how much the speed and the volume, decentralization and security. You can't get all three together, right? And if you start really pushing the boundary of one attribute, you start sacrificing the other attributes. Well, I think we have an architecture in which that trade-off doesn't really need to be made, or you need to make it at a much later date. So whereas something like Ethereum can do something like 15 transactions per second, we're able to do I think around 5,000 transactions per second, and then we're able to scale that to a few tens of thousands of transactions per second without sacrificing any decentralization or security. So it's actually just a very solid piece of technology. So it has very fast confirmation times. The your transactions are included inside the blockchain under a second. So it's basically instant inclusion. As soon as you send the transaction in, it's included in a block almost instantly. And once it's included in the block, unless you personally screwed up, in which case that's your own fault. If you didn't screw up, then it's guaranteed to make it into the blockchain. Whereas in something like Ethereum or Bitcoin, it's not really guaranteed to make it, and because the inclusion time takes a really long time. You have to wait a long time to find out whether or not you made it or not. So there are lots of very interesting features, I think, from a technological perspective. Much faster, with no sacrifice of security or decentralization. I mean, you can run one of these nodes for like, I don't know, 30-40 bucks a month. So it's not really like that expensive to run either. If I wouldn't. I'm not going to say who, but if you look at a lot of these other chains that are out there, it takes like thousands or tens of thousands of dollars to run one of their nodes. It's like, if it's that expensive to run a node, that means people, it means not everyone can run a node, right? Only like rich people or whatever, people who are hugely technically sophisticated can run nodes, and that I think undermines the decentralization aspect. And you want to make it as easy to run. Anybody can run it, even without any sort of technical background, and it's very cheap to run, right? You really want to make sure that it's broadly accessible. So I think we do have a lot of very interesting technical innovations within our Taraxa Layer One. On top of the fact that we're focusing on an entirely different class of applications, non-financial applications, which really tries to make sure we leverage the power of decentralization to make to make data very trustworthy, and to make sure that we can automate processes because of that. Yeah.
So I heard that you guys recently completed a successful test net. So what are the biggest learnings from it, and also what are the next steps?
Yeah, so we had a test net for a while, but um, I think the network really started to stabilize towards the end of last year. So where we don't have like weird crashes and burns on the network anymore. And so I think learnings. Well, there's several interesting things about building a blockchain network, right? The first one is that the blockchain, in Silicon Valley, everyone, there's a saying like kind of, fail fast, fail forward. Like you got to make failures, to learn. Move fast, break things, and stuff like that, right? So in blockchain, you can't move fast and break things. That doesn't work, right? Because if you break things, people lose their money, right? It's it's not a move fast, break things kind of thing. So that's kind of lesson number one, is that there are a lot of, I think, teams out there that try to follow the Silicon Valley kind of like the ethos, which is fine for for things like like a photo app or something. That's fine. Move fast and break things. What's the worst that can happen? You lose your photo or something. I don't know. But for something like this where people actually lose their money, that's not something that you can afford to happen. So you need to stress test and prioritize security and stability over everything else. So it is really something that takes time, and it's not something that you can just rush through. I guess the second interesting thing that we learned is that because the network is being run by lots of different people from all across the world. It's operating under a very heterogeneous environment. So it's not really a controllable environment. And it's very hard to replicate or reproduce bugs, right? So our community members will report bugs, and for the life of us, this is really, really hard to reproduce because they are in some whatever network conditions or something that's creating these bugs. So in a decentralized kind of environment, bugs are very hard to reproduce, and they're very, very difficult to discover. I think ever since the second half of last year, all the bugs that we've been finding have been these weird edge cases that only really happen like under like the moon has to be like this size, and like the birds have to be chirping, and then it happens. Like just very strange edge cases that it triggers specific bugs. So of course makes it even harder to reproduce. So it's very interesting. So that's these are some of the learnings that we have. It's just that building a blockchain network is completely non-trivial. It's not a break, move fast and break things. So you can't just like here's an MVP, everyone use it, put your money on it. No, can't do that. You have to test it for years and years before you can do that. Second, it's very, very difficult to find bugs. And a lot of times, in addition to all of our built-in stress tests, we sort of just have to sit around and wait to see what goes wrong, because we've already put in all the tests that we can think of, and the rest of it is sort of just luck, and then you run into a bug or whatever. So it's very interesting. I mean, these are interesting engineering problems, but yeah, but
Yeah, I
different,
think
right?
like
Really difficult setup.
Ethereum took about 5 or 6 years to move from proof of work to proof of stake concept,
Yeah,
right? Yeah, so it's like yeah, it took them a long, long time as well. And I'm curious, like like for those who are not familiar with this ecosystem, like why would people run a node, right, or a computing cluster, right, to run the Taraxa software, and also what's the incentives for them to get the updates, right? Like uh, get the updates from the latest patch or the latest,
yeah, yeah.
latest software update.
Yeah, these are pretty interesting questions. I think in general, people run nodes because well, for I guess one or two reasons. First reason is that they earn yields. I mean, they get paid to run these nodes, right? Uh, Obviously, no one in the world does anything for free, or at least not sustainably, right? Ecosystems that are sustainable tend to people tend to profit from them. So people run nodes because they make money from them, right? So that's number one. That's actually very, very simple. Node runners they're compensated by the fees and a cut of the commission they charge from the people that delegate their tokens over. So they actually make money. So that's reason number one. Reason number two, I think there are a lot of people out there who are running nodes just because they believe in decentralization, right? So I think there's definitely a lot of mission or ideal driven people that are running these nodes, and people run it for fun because they believe in it. So that's another reason why people want to do it. The Sorry, what was the second question that you asked?
Yeah, like why would they want to run the latest software update?
Oh, the
Like for
latest software.
example, some
Yeah,
people are still on like Windows XP, right? They haven't get
yeah,
get the
yeah,
latest
yeah.
Windows version. So what's the incentives to
That's
actually get the
that's
latest update?
that's a really interesting question because each node runner is independent, right? They really make their own decisions, and so they can choose to run whatever version they would like to run, right? And actually, we've seen this happen before on a large scale. So I think there have been several forks of Ethereum. The most famous one is probably when I think this is 2017 or something when this is the first DAO that actually it's called a decentralized autonomous organizations. It's kind of like
Mm.
running a company or running some kind of a project business venture over a decentralized network, right? So it was an investment fund, I think, and that project got hacked, and I think lots of money was stolen from the project. So at the time, Ethereum was still very new, and people were very upset about this hack. And I think part of the network decided that they're going to revert. They're going to change history, right? They're just going to say we're just going to change history and pretend like the previous X number of blocks did not happen, right? So the hack gets reverted. It's basically like the bank telling you like, hey Harrison, guess what? The month of January didn't happen for you. So everything in your bank is going to change as if it were like December 31st, right? Like, how would you feel about that, right? So obviously some people felt it was good because it removed the hack. Some people felt that this is not good because if somebody could do that, what does that say about the decentralization of this network, right? They said, well, that it means that people can just do whatever they want. They can just get together and be like, I don't like this transaction. I don't like Steven. Like he's an asshole. Let's just revert all his transactions, right? I mean, you can do stuff like that, right? So then you ended up with I think Ethereum Classic, and then you ended up with Ethereum, the current Ethereum. And the Ethereum Classic people basically disagreed and said, look, it's kind of like you got hacked, that's life, man. You just got to deal with it, so we're going to maintain this chain and it's going to be like sort of, it's going to be, it'll preserve the hack. We're just going to keep on moving forward. So the network does get split into different pieces. And then that becomes actually pretty dangerous, right? Like sort of, does networks survive that, right? A lot of networks don't survive that. After a while, people start fighting each other and they disagree, and they split even more, and eventually each network is so small it doesn't have sort of the enough support and enough transactions or volume to really build that ecosystem, and people just abandon them. So that is a risk. But ultimately, I think what your original question is, well, why was someone kind of run an update, right? So I think there are several reasons why they will want to do it. I mean, I think one reason is that, well, there are these updates. First of all, they're like, if it's an update that fixes bugs and doesn't really kind of have these ideological differences, or doesn't really change the economics of the system, then I don't really see why people wouldn't update, right? I mean, sort of like we fixed a bug that makes your node less likely to crash. Like, great. Why wouldn't you want it, right? But for updates that sort of materially changes the economics of the ecosystem, right? Like it changes the amount of money earned by miners or the validators, or it changes the yield, or changes the fee structure, or whatever, then you're going to start having kind of problems, or not problem, potential problems, right? So this is why it's very important in a decentralized ecosystem that before implementing some change, you sort of try to figure out what everyone wants. And actually, we were just talking about this issue like a few weeks ago internally on how we can best make sure that decisions that have material economic impacts are sufficiently supported by the community, and not just sort of like, because we going forward, we can't just sort of make changes, whatever change we want. We have to make sure that the community is okay with this. So you look at like local elections, local officials, right? Like turnout rate's like 10%, right? Nobody cares, right? It's like dog catcher voting or something, like nobody cares. So then you have to build in these systems where sort of like, we want a simple majority of outstanding, sort of tokens in circulation. If that fails, then we do nothing, right? We just release this thing that we think is, we'll put this version here. You guys either want it or you don't, right? So that's kind of the thing. So it's driving consensus is pretty. I don't think it's a solved problem, because it's more of a human problem than a technology problem. But yeah.
So what's the Taraxa community like? And philosophically, are you guys more of a decentralized maximalist? Like, for example, earlier you talked about the Ethereum example. Like, are you guys more on the side of, okay, the hack happens, but hey, that's just the nature of the decentralized networks? Or are you guys more on the current Ethereum communities, like, not maximalist on the decentralization side?
Yeah, we haven't taken a vote on anything yet. So I can't say I would speak for the entire community. But I think myself and everyone on the development team, so we write the code. I think we're sort of a, kind of a, we need to preserve decentralization, right? So I think there was a while ago, was it last year or the year before that? I don't remember exactly when, but there was a hack on one of these exchanges that listed the Taraxa token, and like a lot of token was stolen, right? And the hacker, I don't know, is moving the tokens around. I don't really know. So we, we're going to have a conversion event in which we convert what's on the ERC20 tokens on Ethereum. We're going to convert that into native Terasa tokens on our own layer one network pretty soon. So I think we had a very brief discussion about this issue, and I don't think anybody on the team was like, well, let's reverse the hack or something. I mean, that's, well, first of all, it's going to be very difficult to do that because so many transactions have happened afterwards. I don't even know how you would reverse it. Second of all, I don't really believe in that. It's like you, Mr. Exchange, you got hacked. That's kind of your fault. And we're not gonna we're not gonna do this. It doesn't really make a lot of sense. It happened, and so it happened, right? So that's sort of how we feel. Yeah, I mean, you have to be committed to decentralization, or you're not. I mean, I understand why like Ethereum made that decision back then, because the hack was so big, like it was hundreds of millions of dollars, right? For us, obviously, it was not anywhere near that size, but but that kind of a mistake or a hack I can see that it could really make people lose interest. But that was 2017, and since then, like I don't think anyone cares about like $100 million hack anymore, because we have $1 billion hacks these days. So people are like, whatever, that's your loss. So I think the community somehow has gotten a lot. The overall sort of crypto community has gotten a lot more resilient um, against sort of these kind of hacks and Ponzi's. People are pissed about it, but I don't think anyone is sort of calling on the layer one developers to like reverse it. I mean, maybe people are doing that, but it's not gaining any traction, right? Because anytime people have, Ponzi scams, hacks, and whatever, I mean, if enough layer one validators decide that they want to roll it back, it could happen, right? It could happen, but I haven't seen any of that happening. So I think the entire community overall has become pretty committed to this sort of, hey man, you're in this game, right? And if you lose, that's you walk into this game, with your eyes open, so that this is the risk that you agree to take upon yourself to shoulder. So yeah, I think the entire community has gotten much more much more decentralization kind of maximalist, like you said.
So how do you get the community on board on the initiatives that you want to push, right? Because in traditional companies, like the CEO says, "Hey, you go do this," and more or less, most people will say, "Okay, let's go ahead." But
Yeah.
in the new decentralized organizations, it's a little bit different, right? So how do you get everyone aligned and move in the same direction?
Well, since we haven't really had a vote yet, but that's coming up. I think after conversion, we have several votes that we have planned. And yeah, I mean, since I haven't done it yet, I can't tell you how I did it. But I think the way to do it is basically trying to publicize the information as you know sort of as much as possible, making sure everyone who's at all paying any attention, and there are lots of people who are not paying attention, right? Anyone who's paying any attention at all will have no trouble spotting it, right? Making sure all your social is updating this, all your social groups are updating this. Maximum awareness, give plenty of lead time, and I think as the development team, we need to make sure that we give a very thorough analysis, as unbiased as possible, on sort of the, what are the pros and cons of voting yes or no on this, right? Like, just give very, very solid analysis on that, and hopefully back it up with, quantitative data. So that's sort of the direct democracy side of the view, right? Like we said, direct democracy always has a voter apathy problem. So
Cool. So last question, like since 2013, when you first get into or heard of blockchain, like there has been two or three ups and downs and cycles, right? So how do you build a sustainable business and a sustainable community? And as we enter into, I would say, another crypto winter, what's your plan in emerging out of it?
yeah, so these it's very interesting, like what exactly is like so our development team is, we're not a profit seeking like entity, right? We don't earn money. We don't earn income. So at some point, the thing that I always joke about is the day that when nobody needs us anymore, when we all become unemployed, is the day that this ecosystem has become truly successful, right? I think that's our goal, is to make ourselves obsolete. But anyway, that's sort of an aside. So I think for us, in terms of our on the development team side, we need to make sure that we execute fast, and we control our costs. I mean, just like any business, you hit your targets quickly, and then you do it as cheaply and as quickly as possible. So that's sort of the basics of a business. But what makes an ecosystem survive is a little bit different than what makes a business survive. A business is sort of, are you making more money than you're spending? That's, then you're doing okay, right? But for an ecosystem, it's really about, well, how much activity are you engendering on the network, right? Are people using it, right? So that's actually the most important metric of success. So for us, what we need to do is to make sure that we present the best case possible for our applications and our technology to attract as many people to use and build on the platform as possible. It's not an easy task by any means. But I think we're in a good position to achieve that. And of course, like you said, I think crypto is very famously cyclical, and its cycles are very brutal, right? I mean, when it's up by like 1,000 times. When it's down by 99.9%, right? I mean, I think it's very, very brutal. So I think we just need to make sure that it doesn't matter if the market is up or down. Our goal is just always the same, right? We just have, the goal is to drive activity, drive adoption, and that's the only goal that we have. And the adoption activity we drive has to be sustainable adoption activity. There are lots of projects in the space that are flashes in the pan, right? They're like world famous for like a month, and then nobody knows who they are anymore. That's obviously not what we're looking for. So we're looking to lay the foundation and do things, and there is a tremendous amount of noise. Anybody who is in this space knows that the amount of noise is amazing, and the pressure to actually follow the latest meme. It's huge. Community puts a huge amount of pressure because in any crypto community, I can guarantee 90% of them are going to be speculators, right? So there's going to be a lot of pressure to actually, like, why are you talking about the latest meme? Like, why don't you have a dog coin or whatever? I mean, just all kinds of stuff, right? So you have to figure out. Like, look, I mean, that you have to be able to filter out that noise and say, look, we have a vision. We're doing something that's with a primary aim to have sustainable adoption rather than kind of like, we're going to be the hottest meme this week, kind of thing. So
Cool.
so yeah, just keep your eyes on the goal, driving adoption, sustainable adoption, whether it's bull market or bear market. Just focus on what we're doing. Yeah. So
Cool. Well, thank you, Stephen. It's always glad to catch up with you. And if anyone wants to like learn more about Taraxa, how do they contact you?
well, they can just go to our website, Trustworthiness.io. All of our socials channels are actually on the front page of the website. You can check us out on Twitter, on Discord, in Telegram. So yeah, drop on by. And me, I'm always hanging out in these groups. So so nonstop.
All right. Thank you, Stephen.
Yeah.
Thanks a
Thank you,
lot.
Harrison. Yeah. Bye.